Welcome to the June 19th, 2023 Advanced Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president, McGowanGroup Wealth Management, the team that cares, a team of 10 serving affluent families right here from the Crescent in Dallas. Real portfolio managers worked all week to put together the most important data and the financial headlines of the week. One of the biggest headlines this week, inflation. So, inflation peaked at 9%, June of 22. Remember that date because it's going to give you a forecast for what happens about a month from now that could be most important news for July. See this 9.1, last time inflation came in, it was 4.9 and it dropped to 4% trailing 12 months, the Fed's preferred measure. That's how they set the short rates. Well, it dropped from 4.9 to 4. That was the news this week with the May inflation report. Inflation was only 0.1 in May. Remember that number too. Now, what happened after that? Well, we look over here, we see the Dow Jones Industrial Average, the highest since December, right? But this is just a year-to-date chart. It was over here in December, 34,400 at the close of the week. Wow, this is the way the markets reacted. Jerome Powell said we're going to pause the tightening cycle that has tortured the financial markets by raising the cost of capital and rates on cash compete with other assets like stocks, bonds, global high yield bonds, other assets. Now, we're going to see the reverse effect likely, and that's what the market appears to be anticipating. By the way, this was the March lows. Remember the banking sector meltdown? Well, it turns out so far it's just 4 venture capital focused banks, all based with operations in California. So they pretty well fixed that crisis, at least for now, but you got the real estate crisis coming up because you got to refinance into high interest rates. Well, what happens from here? Well, there's some potential good news as we go through this. This is inflation. So we're looking at 2 years right here. And this would be 1.2%. Notice June of 22 was absolutely huge. If you annualize that on the calculator, it's about 15% annualized inflation. 1970s, run in circles, scream and shout. This was a very bad month, and that's where obviously the markets reacted badly. What's happened since then? Well, look at this. That's deflation, right? And then you average these, inflation returned to normal. And we told you this as it was occurring in these months. That's why you subscribe to NetWorthRadio.com and YouTube, McGowanGroup. Just hit the subscribe because we were saying it back here. Now, the Federal Reserve kept going up because they wanted to reach their 12 months of inflation, trailing 12 months measure. That's where they think they have to go to get the rate of inflation down. What's going to happen in July? Well, let's do the math. Inflation last month was 0.1. Well, let's say that June inflation is 0.2. Okay, this is 1.2. It drops off the trailing 12 months. Do the math. Boom, you go from 4% trailing 12 months inflation to 3%. 110 years, the inflation rate has averaged 3.3%. That would be back to normal. Wow. And that means that the Federal Reserve, they said, yeah, we may do 2 more hikes. I don't know why, but they said they might. Well, they paused back in 2019. I'll show you something important there. By the way, this is deflation. And then I'm going to get to what happened in 2018-19 because it could be a parallel scenario. This is rent. Rents were up 17.5% during 2022. That's a big rent increase. If you're a renter, you're paying $2,000 a month and all of a sudden you've got $2,340. That's a big increase. First time they've dropped. It's only happened twice since 2008. Rents are down year over year, and this is a lagging indicator. Thank you, Redfin. That's May of 23. Wow, that is deflationary pressure. This is the S&P 500 yellow and the Fed funds rate all the way back to 2004. So it's a 20-year chart. 2007, they went to 5.25. That's exactly where they are right now. After they did that, the wheels came off the go-kart and they had to go to zero, right? Once they got to zero, equity started to go up. Different scenario in 2018-19. That tightening cycle actually began back here in 16. And you can see they were raising rates to control inflation, which is their job, but they're not supposed to cause unemployment. Full employment is their other objective. All right, they said right here, like notice this little dip. This was a 20% correction in the S&P, and they came out right here and they said, we may go up a couple more times. That's exactly what Jerome Powell said this last week. But it's going to be data dependent. And they stayed there, and then they started back down, and you had a huge equity rally. You could see, wow, once they paused, stocks went up because the value of assets doesn't have the competition of higher cost of capital. This is the pandemic, by the way. They went to zero because the wheels are coming off the go-kart and the economy is shut down, so they gave away lots of free money and they caused inflation. Now they had to go back up. Do this scenario. This right here could be very similar to this right here when they said, hey, we're going to pause. And you can see the spike started. So the all-time high on the S&P was 4,800, by the way. And, you know, this week we finished still substantially below that. Now, 4,400 is where the S&P finished the week. So with that scenario, what about earnings? Good news could sneak up on you in July because real GDP was projected to be a recession in the current quarter. But no, what happened? It is 1.8% forecast by the Atlanta Fed. We update that because we want to know, is it really a recession? 4 quarters in a row, the economists told you it's going to be a recession, and 4 quarters in a row, including the Fed, they were too low on their projection, and the economy grew at about 1 to 2.5%, depending on the quarter. So growth actually coming in here. What does that mean for corporate earnings? This is corporate earnings all the way back to 2017. And you can see the pandemic effect here. Lots of companies had to take write-offs. This is the earnings recession that we just had. All right, look at that. So earnings did go down. The high was about $54 per S&P unit after tax. So that's the profit, and it went down. And we're right about here. Well, what happens as we get into July? Uh-oh. Profits are forecasted to rise, consistent with economic growth. Wow. Look at that. And the Federal Reserve is projected to go back to normal on interest rates based on the data I just showed you. And profits forecasted to be, this may be too optimistic, but that's over a 20% increase by the end of 24, even if it's only half right. That is increasing profits, wow, interest rates coming back down, low inflation. Kudlow on CNBC came up with the term, or he was on Fox, I believe. Anyway, Larry Kudlow came up with the term Goldilocks, not too hot, not too cold, profits are growing. Wow, a whole different scenario than the torture we endured over the last 15 months. McGowanGroup Wealth Management was busy assembling great portfolios. We got to record cash flow, and I believe we have record gain potential based on our selections. So come get a plan, go to networthradio.com, contact us there. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.